Main market UK-listed URA Holdings is mining for emeralds, and it's progressing its plan to restart the Gravelotte emerald mine in the Limpopo province, which was the world's biggest emerald mining operation in the 1960s. I'm delighted to be joined by the Chief Executive, Dr Bernard Olivier. So, Bernard, you've raised £1 million, well done. But in previous conversations, you've said that there would be no fundraising at a discount to the share price. However, this last tranche of fundraising was done at a 24% discount. Why did this happen? Because a lot of people are not very happy.
Morning, Sarah. And yes, thanks for also getting the chance to explain. What we said in the past is that we will always try and minimize dilution. The board itself is large shareholders. We've always been participating in placements. And in this case as well, the board came in with roughly 14% of the placement. So as much as any other shareholder, the board also are trying to avoid dilution. Unfortunately, we are a standard listed company, so a main market company, as you said. And we therefore only get a certain headroom every year that we can raise money on before we have to publish a secondary prospectus. So for us to raise any further money this year after the fundraising we did in early September, which was a small fundraising managed by us, where we did do it at market price, including all the ones prior to that, we had to go through the route of a secondary prospectus. And the secondary prospectus is unfortunately quite a big deal. You've got to get a competent person's report done on the mine project, which in our case is ACA Howie, one of the leading competent groups that can do gemstones and emeralds. So they had to write the entire competent person's reports. Then, of course, you've got all of the other components that goes into a secondary prospectus, and as well as the fees that goes with the entire process. So the fact that we then had to go through a secondary prospectus makes our timing and ability to, for example, delay a placement very, very limited. Unfortunately, the Hamas-Israel war broke out just as we started the process. We delayed as long as we could, but we had to complete the placement because the costs were already incurred for the prospectus. And therefore, we were forced, unfortunately, to do it at a discount, despite none of us in the company and on the board wanting to do it that way. The alternatives, are very, very dire if one doesn't raise money and have costs that you are incurring. So we really do try everything that we can to minimize dilution and raise funds at increasingly higher prices. But we had to raise this last amount of money, £1 million, to get us into production. We had no available headroom to just raise a smaller amount at market. And unfortunately, as hard as it was, now we've got to make sure that that money takes us into production, which will completely change the valuation on the company. And as you say, some investors are focusing on the discount and aren't happy with that. But equally, I've got investors who are very supportive and who are glad that we've raised the money so that we can now proceed into production, which will completely change the company from an exploration company or a company in development phase into actually a mining company again.
Okay, it's very important. And thank you for explaining about the prospectus element, because many investors just assume that a prospectus is a once-in-a-lifetime event that happens when a company IPOs on AIM, but you are a main listed company, and hence the references to the secondary prospectus certainly is an education for me as well. So you have raised the money, 1 million before expenses. Hopefully those expenses aren't too brutal. So let's have a look at how you're going to spend the money. In fact, let's tell investors what you've already bought. So for example, have you already bought critical infrastructure like the optical sorter, for example?
We've already done the first large payment on that optical sorter, and then manufacturing started in China. So part of this capital raise was to pay the remaining component of that, which we will now be able to do. Then that optical sorter will be shipped to us. So roughly a breakdown of the use of funds is about £350,000 goes into mine infrastructure and capital cost on the mine. And then the rest is the commissioning, the installation of the actual processing plant and mining operations. And therefore, roughly 400,000 is the working capital for getting the mine into production.
I'm just wondering what the Capex is to get this mine into production again. Are you having to deconstruct the existing mine to reconstruct it, or are there any elements that are still workable?
We've been working on that now for a year and a half, that we have taken all the components that was previously there, we've upgraded it. So a lot of that capital costs have already been incurred. So this remaining 350,000 that we are now spending is the last component of it all to get us back into production. We have announced not too long ago some of the major items that we've done, which includes having the processing plant about 60% complete. So now we're doing the remaining 40% of the processing plant with this funds that we've raised. There's infrastructure like water storage facilities, dams that we had to refurbish. We built a few new dams as well, not only clay dams, but also cement dams for using in the processing plant. Then other things like the big processing plant structures that we are in, we have refurbished that. General haulage roads, electricity supply, we've upgraded. So there's been a lot of work over the last year to get us to this point where we now at the last 40%, 35% to get into production with the remaining cash that we've raised.
I'm just wondering what the scale of the opportunity is like. When you and I spoke in September, you said there's a huge, significant additional resource that is classified as JORC exploration target that is between 166 to 344 million carats, which you believe is still in that deposit. Does that still stand?
Oh, very much so. And again, this was done by world experts in the field. So it is an independent assessment. It's not the board's belief. It was independently done based on a combination of drilling work, bulk sampling work, and all of the historic mining data, which was all used by ACA Howie to come up with that independent JORC assessment. So there's currently also 29 million carats that is directly in resource statement, which is where we're going to focus the mining activities on. Just to put it in perspective, that's at 3 million carats per annum, which is when the mine was at peak production in the 60s and 70s, that was roughly what was mined. So at historical peak production levels again, that gives us 10 years life of mine. And then on top of that, you've got this additional, almost 10 times larger resource, which we can bring in as we progress the mining operation. So there's a huge resource there that is still available for us. And we've also identified, various areas where we will be starting mining during the commissioning stage and feed it into the new processing plant.
So, Gravelotte was the world's largest emerald mine 60 plus years ago. Could that be the reality again in the 2020s?
I don't think our aim is to have the world's biggest emerald mine necessarily. The goal is to make it very cost effective. I'd rather have a smaller operation, as we're doing now, with low capex, low opex cost, that is more profitable. And for example, at one stage, there was over 400 people doing optical or doing sorting on the mine, hands-on sorting of emeralds. Whereas we are using an optical sorter. So, we won't have those large numbers of employees. The optical sorters basically replace the need for 400 people working as sorters. So the goal is very much to start on a small scale, very cost effective, and then to grow it larger. And there is significant, with that resource underneath it, there is significant scope to grow it further, but always in a manner where, we want to make this profitable and then grow it from profit.
Finally, talk to me about the people and the population. Talk to me about where the mine is. What relationships do you have with the population and the administration there? And what you have, will it be coveted by others?
So the mine is located in the Limpopo province, as I think you mentioned in the beginning. It's quite a large province with about 125,000 square kilometers in size. Although it neighbors Zimbabwe, Botswana, and Mozambique, we are sort of in the middle of it. So it's roughly 200 kilometers to Botswana, 150 kilometers to Zimbabwe. And then between us and Mozambique is the Kruger National Park, which is roughly the size of Holland. So we are located around a lot of private nature reserves as well, which is very beneficial for us. But 3 of our fences are actually private nature reserves where they've got big 5 and therefore very high security as well. And that helps with our security because clearly security is one of our risks when you have a high value product. So we do have on-site security, armed security, and then with our neighbors, we've got a very good relationship. And as I say, they've got equally good security because of rhino poaching and so forth in the area, which is covered by their security. So yes, it is a valuable deposit. And when we start to produce, of course, there is a product coming out that is similar to having, money lying around at home, but we also in the process ramp up our security further. The material will be going off-site basically as it is produced, so there isn't a high security risk on site. And then we work closely with the surrounding farms to make sure that those farming areas for the private game reserves to be aware of security risks that might come up.
Okay, thank you. Well, you stay safe, Dr. Bernard Olivier, Chief Executive of URA Holdings. Thank you very much indeed.
Thank you for your time, Sarah.